Got some extra money? Most likely you have been very responsible with your finances. You stick to your budget, cut down on your expenses, and live a frugal lifestyle. Your discipline and being wise in handling your money have translated into more cash in your savings account. The best thing to do with your extra savings is to invest it. There is a long list of options on how you can invest your money, and buying stocks is one of those. The words stocks and stock market may sound intimidating, especially to beginner investors. But fear not, we have prepared this video for all of you who are leaning towards stock investing. We will give you an easy-to-understand explanation about stocks, the factors you need to consider in choosing a stock, and the best stocks to buy now. Watch to the end of this video to help you make an informed decision. It's fine to take the risk, but make sure it's a calculated, intelligent risk. Don't jump off a cliff without a parachute. And this video is your safety gear before you jump into buying stocks. Owning a stock is like being a part owner of giant companies like Apple, Amazon, Samsung, Google, or Tesla. If you are new to investments in the stock market, you may have heard this word countless times, but are unsure what it really means. When you own a stock, you become a shareholder. It gives you the right to own a piece of that company. You're literally buying a share of that company. If the company is performing really well, you can make a fortune. It is risky to invest in stocks because of the volatile market, inflation, and other elements beyond your control. But if you do thorough research, study the market, and invest in your financial education, you will surely gain much from buying stocks. One way to make money with stocks is to buy a stock and wait until the price goes up. Sell it for a profit when it does. Another way, which I think is a better choice, is to make money through dividends. Some companies pay dividends to their shareholders, usually on a quarterly basis. Stocks are an excellent form of investment to create and build wealth. Grab a notebook and a pen and take note of the following important information. Invite your family and friends to watch this video and learn together on how to be a shareholder. In choosing which stock to buy, you have to consider the following. Evaluate the company's earnings. If it grows steadily, then that's a good sign that the company is doing well. You need to consider the company's products or services, whether they are relevant to the current and future needs of people. Check if they have a large target market and their ability to sustain cash flows. If your research shows growth potential for the company, then it might be a good buy. Check the company's strength. Group companies according to industry. For example, in the tech industry, we have Apple, Samsung, and Sony. Then, compare the performance of each company against one another. Does it have the edge over others? Will it stand out among its competitors? Ask these questions when evaluating a company's strength. Most companies, if not all, carry debt. According to Robert Kiyosaki, there is what we call a good debt that can yield profits and put money into your pockets. Even big companies use debt to fund their projects. However, you have to evaluate the debt-to-equity ratio of a company. A good debt-to-equity ratio should be lower than 1. Higher than that is considered risky. To know that ratio, you divide the total number of liabilities by the total amount of shareholder equity. Another ratio you have to consider is the price-earnings ratio. To get this number, you divide the company's share price by its earnings per share. With this ratio, you can learn whether the stock is undervalued or overvalued. If it is undervalued, go ahead and buy. Some companies pay dividends. Check whether their payouts increase regularly. If it is increasing, it is an indication that the company is performing well. A well-managed company gains the trust of investors. If you buy stocks from companies with excellent leadership, this means the risk of losing your investment is low. It also means that the company will last through the years. To evaluate the company's leadership, consider the following factors: company culture, customer satisfaction, brand recognition and loyalty, revenue growth, cash flow and debt levels. This affects the long-term stability and strength of the company. Now that you know what things to consider in choosing a stock, here are some of the best stocks to buy. As we run through the list, always keep in mind the factors we discussed and check whether these companies satisfy all those requirements. Zoom Video Communications Inc. The pandemic has significantly boosted the growth of this company. When schools and companies transitioned online, the number of Zoom users skyrocketed. Zoom is the leader of video communications, despite the presence of other platforms like Skype, Google Meet, and Microsoft Teams. Even after the pandemic, when students went back to school and people go back to work, the online scheme will surely remain because of its convenience, flexibility, and collaboration features. It is one of the fastest growing stocks. Its revenue growth is 368.8%, so we can safely say it's a good buy. Tesla Inc. It is the front runner in the electric vehicles industry. Tesla needs no introduction as its CEO, Elon Musk's popularity is constantly making headlines, especially with their newest car released on June 10, 2021. The new Model X is said to have the most power and quickest acceleration of any SUV, with increased awareness about the environment. More people favor using electric vehicles and clean energy. So Tesla is here to stay for years. Tesla's market cap of $596 billion is another reason why it's wise to buy Tesla's stocks. The Cooper Companies, Inc. It is a global medical device company that develops products for contact lens wearers and provides services that focus on the health of women, babies, and families. The company increased their revenue by 37% in the second quarter of 2021 to $719.5 million. Because of the recent crisis, people pay more attention to their health. Health companies, like the Cooper Companies, are relevant more than ever. Boston Scientific Corp. Another fast-growing stock is the Boston Scientific Corp., a global developer and manufacturer of medical devices used in cardiovascular, respiratory, digestive, and neurological health. Their products are used to treat 30 million patients each year. Its earnings per share growth is 2,200%. One good reason why it's good to buy the Boston Scientific stock. Agios Pharmaceuticals, Inc. Its PE ratio is 2.5. It is one of the best value stocks. It means that it is undervalued, yet it has so much potential that its price will increase in the near future. It is a biopharmaceutical company that develops medicines for treating genetically defined diseases like anemia. Adobe. Because almost everything is done online, companies and schools use Adobe more than pre-pandemic times. Its revenue increased 26% year over year, and the earnings per share jumped 38%. Spotify Technology. Music is the constant companion of all kinds of people. They stream music or listen to podcasts on Spotify. The monthly active users are increasing 27% year over year to 345 million. Are you a Spotify user? If you are, then don't just stream music and pay for the monthly subscription. Make money by being a Spotify shareholder. Comment below which stock you are going to buy and why. This video may have helped you make an informed decision, but remember to do further research. Thank you for watching. We always appreciate your support for this channel. As always, like and subscribe if you have found value. See you in the next video.